the long thesis on Netflix is that it's a 300 million subscriber company. So 130 million is nice, but they're not even halfway there yet based on the way it's supposed to be trading. What are we looking for? We're looking for 5 million more subscribers, net additions, most of those coming internationally. Look, you have to give credit to Netflix for even offering that guidance in the first place. A lot of times companies don't get that granular in terms of 650,000 in the U.S., 4.3 million overseas in terms of the estimates that they're offering. That's nice. Of course, every little miss, though, means that much more to the market. It is the subscribers that's driving the price. So you want as much visibility as you can get. Third-party data around app installs tell us they're probably going to meet that number. They're probably going to get close to it or close to it anyway. So, I know the market's leaning heavily on tech these days, and Netflix in particular, because it's one of these really, really high-flying stocks. But I would like to know more about how that international business actually creates more profits for them, because it's nowhere near as profitable as a U.S. business.
Let me ask you a separate question. Obviously, coming up in 2019, all of a sudden Netflix is going to have a whole newfound sense of competition, or at least that's the expectation.
AT&T is coming out
in the form of HBO plus this Warner media program, which was announced that last week when I was in LA at that Vanity Fair event, but also Disneyflix. Hulu, they're going to ramp up more money into Hulu. So what does that look like? Do you think that do you think that people stick with Netflix? Does Netflix still own that market, or do you think that there's a potential that people say, I've watched what I want to watch on Netflix? Are people in love with the programming on Netflix right now?
They are, but also the key, I think you bring up the good point, which is that's why Netflix is spending, what, $13 billion on content this year alone, just to keep that flywheel going. So the good and the bad of it is that they pay for it once. No matter how many times you watch it as a consumer, it's already paid for, right? It's good for keeping you the customer. Once they're finished with that, they need something else to watch. So they need to keep adding more content, the way that any network keeps adding more programming. So they need to keep spending. At the same time, they've got a big head start. I think AT&T's new service, it's going to be hard, right?
Because what do you think? I mean, there's a distinction between what I imagine these other platforms are going to try to do, which is find these massive hits. They're going to get into the hit business, right? Because if you have Game of Thrones, there are people who will subscribe simply because you have Game of Thrones. And maybe they'll turn off afterwards, but oftentimes they will stick with it. Whereas Netflix has definitely gone down a road where they are trying to appeal to all sorts of niches within their constituency base. And
the niches can cross demographic lines, can cross sort of borders as well. I mean, there's the guy in England, or there's a young person in California that they're like the same thing. That's how they see things. I think what's going to be another aspect of this is AT&T, which now owns a lot of content, Disney, which owns a lot more content with the Fox deal. They're going to start roping that stuff off. This whole sort of syndicated window where it was a hit in the theaters, and then it went into syndication, and then it eventually went to television. That's going to stop. They're going to keep it for themselves, which is going to force everyone else to kind of keep their content for themselves. You're going to see sort of a content Cold War emerge. That's why Netflix saw this coming. That's why they're spending so much money.
Is there any way that people pull back on some of the spending, or you think it's just an arms race where it's more and more?
Well, I think it is going to be an arms race. I think the fact that, Disney and AT&T, they're starting out with a deep library to begin with. So they have sort of Netflix is building their library, and I think they've been doing it for a few years now, so I think it's going to help them. But yeah, so it's going to be the other side of it too is for the consumer perspective, all these things are priced very similarly, right?
Although, look, if they don't get the subscriber growth, is there an argument that they would then have to pare in some of the spending, or is that an argument to double down? What do investors want to see?
I've been looking for that magic number, right? At what point, what subscriber number does Netflix have to hit
in order to justify spending?
Exactly right. So, I haven't gotten to that number yet. I'm still trying to do the math. Netflix hasn't told us exactly either, but I know they have a number in their head. They know there's a point at which they have enough subscribers where they can sort of rein in.
Can I ask you about the syndication second window idea?
Yeah.
Because that has always been a huge part of the economics of these programs for those that make the programs. And the idea that there's no second window, that used to be money out of thin air for a lot of these companies.
You got paid much more for the thing that you already got paid for, right?
Right.
That's what's great.
And that's how they made the numbers work.
But that's the bet, right? So like Disney, Marvel's a huge franchise for them, right? It's huge. It's on Netflix. It's very popular on Netflix. After 2019, those Marvel movies will come off Netflix. Those are like hundreds of millions of dollars that Disney got paid for that
up front.
Up front. Once that stops, Disney's making the bet that, you know what, those billions that we're losing, or not losing, but not getting in revenue that we otherwise would have gotten for this licensing window, we have to make it back in subscriber growth for our own thing, whether it's for Hulu or their Disneyflix thing. So that's the big gamble. You know, you got to give Bob Iger credit for taking that big jump, but, you know, he's what? He's around another 2 or 3 years?
We've managed to have this whole conversation and not mentioned Amazon. How do they factor into this? Well,
so for them, it's less of a core product, right? Their video streaming is a marketing expense.
No, but they're a player in the
shoes.
Industry that makes everybody else react to them, right?
Well, that's what's crazy about Amazon is it's not even something they're solely focused on, right? One thing to look at in terms of Amazon in particular is how they might go for sports rights, right? I think they own the Thursday Night Football, the ancillary rights for streaming. When Monday and Sunday Night Football comes up for renewals, and they'll start talking about it next year or the year after that, you know, how aggressive will Amazon be? And I think that will tell you just how important video is to their video as a standalone, right? So streaming as a standalone, beyond it just being a marketing expense for selling more items.
Ed, tell me really quickly again the subscriber numbers to look for tonight, if that's what the street's going to be watching so closely.
4.3 million in the U.S. and some change, and 650,000 in the U.S. and 4.3 million overseas. It is mostly an international business now. More of their revenue comes from overseas than from the U.S., but there's less visibility in terms of just how profitable each region might be.